Hello everyone, welcome to our YouTube channel. And today I would be talking about what were the five factors which have dragged the market from its all-time highs to below 11,500. So the Indian rupee has been falling consecutively for six sessions for the first time in nearly 5 months and is now close to 72 rupees a dollar. And at the moment bearish the markets are showing a bearish sentiment, and the Sensex has fallen more than 300 points and Nifty over 100 points intraday, that is on Wednesday, September 5th 2018. And It has fell from its all-time closing high of 11,738.50 on August 28 to around 11,410. That's approximately more than 300 points, and within a week's time. So the correction in the broader space is bigger than benchmark indices, with BSE mid cap index sliding more than 800 points in three consecutive sessions. So what are the five factors which has affected this? And we'll be talking about those top five factors. First is the rupee fall. The Indian rupee has been falling for six consecutive sessions, and it's the first time in nearly 5 months, and it's close to 72 rupees a dollar. And there is some respite in Indonesian and Philippines currency markets, and there is a fall in crude oil prices too. Now, the currency has touched a record low of 71.9650, down 40 paise compared to previous close. Now, it depreciated by more than 1.40 per US dollars in three straight sessions, and 1.80 per US dollars in the last 6 days. So it has fell nearly 5% in last 1 month, and almost 13% till year till date. So the key reasons behind this fall are strong dollar demands, and Fed Reserve's interest rate hike, and also consistent growth in US economy. Now, some experts feel that the rupee has just appreciated in line with the weakness in the broader emerging market, and despite the recent weakness, the rupee still continues to remain overvalued in real effective exchange rate terms. Some experts also say that this is a normal level. This should be a normal level for rupee to trade because of the rising inflation costs, and 70 to 75 would be an ideal range. But again, we'll have to see how it will trade in the coming few months. But it definitely has impacted businesses all over India, and of course the import and export divisions, and also businesses which requires payment in US dollars. Second factor would be bond yield and rate hike. So, as a result of currency fall, 10-year government bond yield expanded to 8.12%, the highest level since November 2014, against 8.06% on Tuesday. The lower rupee also created fears of rising inflation and rate hikes by the Reserve Bank of India, and some economists are expecting RBI will hike repo rate in the next policy meet in October. And considering strong economic growth in June quarter 2018. So the Apex Bank has already hiked repo rates at which banks borrow money from RBI by 50 basis points to 6.5%. Third factor was correction in global markets. So Asian markets has traded sharply lower following the turmoil in emerging markets and fall on the Wall Street. In US markets, China's Shanghai Composite was down 1.5%. Hong Kong's Hang Seng 2.6%, while South Korea's Kospi fell 1%, and Japan's Nikkei declined 0.5% at the time of writing this article as of today. Now, US markets on Tuesday corrected mildly amid increasing trade tensions with China and Canada. S&P 500 and Nasdaq Composite closed the session 0.2% lower. European markets were also under pressure today, with Britain's FTSE, Germany's DAX, and France's CAC falling 0.4 to 0.9% as of today. Um, Trade war tensions is another factor which is driving the markets downwards at the and is hampering investors' sentiment. The trade talks between US and Canada will resume again on Wednesday after the failure to reach a deal the previous week. So that is today, as the time of this recording here. And Canada and US both are looking to find common ground to revamp the North American Free Trade Agreement, that is NAFTA. um, Technical factors is the last but not the least factor, and Nifty has breached 11,485 in intraday trade, and hovering near its crucial support of around 11,400 levels, which also happens to be hold highest put open interest. And most technical experts were anticipating a fall towards 11,400, and if it breaches 11,500, they were expecting it to go till to 11,400, which actually happened on Wednesday, that is today. And the overall data has turned slightly negative at the current scenario, and the more weakness can be expected as we move forward. These are what experts are expecting. However, I believe that there is a strong support zone at around 11,400 levels, and Nifty actually bounced back sharply from that levels. So I do expect probably a relief rally or a reversal from here, but we'll have to wait and see. And so these are the top five factors which actually drag the market towards 11,500 and 400 levels today, as of September 5th, 2018. And we'll have to see how the markets will behave. My personal opinion is Nifty should bounce back from here, even though based on the data it doesn't look like, but that's again my personal opinion based on some other parameters. So hope you enjoyed this informative video. If you have any questions or clarifications, feel free to ask and comment. I'll be happy to clarify them for